Well, I'm happy to be here today to sort of try to distill about 6 years of my experience into 15 minutes. So what I want to do is talk about some of the kind of international aspects, and as I was saying, kind of the development and some of the issues that were addressed in the development of these two standards. One standard for accountants in public practice and another standard for accountants who are not in public practice. Okay, well, Linda mentioned the expectations gap in her discussion, and in a way, what's going on now is a new version of that. When I got into accounting in the mid-'70s, the expectations gap controversy was a huge deal, and it always has been and still is, but in a different way. Because in a way, these two standards are about what the public should be able to expect of accountants in a particular way. Let me give a couple of examples of what's what we see here that concern particularly like securities regulators and ministers of finance and bank governors and so on. Just recently, I read an article in the Financial Times about ING, the Dutch bank. They had allowed companies with their customers to launder hundreds of millions of euros and have now been caught at it. The person who was in charge of that has been fired, but he's going to be kept in the job until they find a replacement. So that's sort of like how important they think that is, I guess. Danske Bank helped launder $30 billion of Russian money in a single year in one of their Baltic offices. There have been a lot of audit failures in the UK recently, to the point where the Financial Reporting Council, which is the regulator in the UK of accounting and auditing, its existence is in question now. So there are expectations that are I guess, in a way, same as they have always been, except maybe even magnified. These aren't going away, and they have attracted the attention of major institutions around the world. More locally, we could mention SNC-Lavalin and the acts there. In these cases, there are the questions of what should we expect accountants to do. In the case of SNC-Lavalin, I think it's probably pretty clear that there were accountants, were employees of the organization who knew what was going on and didn't apparently do anything about it. And the same with with ING, you can't launder hundreds of millions of euros without somebody thinking something's going on. And so these are major issues, and they're not going to go away. What I want to do today is to talk a bit about why we have this kind of standard in the first place. I've already mentioned a few of those issues. What are the primary features, and what about adopting these standards in Canada, and some suggestions for research. And the first three parts of it, I think the other speakers on this panel will also have things to say about it, so I hope that what I'll do is just sort of kind of indicate that and as an opportunity for them to have a further discussion. So there's some bedrock principles of accounting that we are pretty clear about. The first sentence of the IESPA Code, International Ethics Standards Board for Accountants, is that the accountants have a duty to act in the public interest, and not primarily in the interest of their employer or client or themselves. So it's a basic question. Then what should a professional accountant do if their employer or client's interests conflict with the public interest? That's really, in a way, what this is about. Now, professional ethics is about professional accountants having an ethical duty to act. And it's explicitly clear that they have to act in accordance with laws and regulations. But a code of ethics also implies that there's a standard of behavior which goes beyond that. If a code didn't go beyond legal requirements or forbidding of acts, there'd be no point in having a code, because you just have a code that said, don't break any laws. That'd be the end of it. The NOCLAR issue is an issue about law and ethics, really. It's an ethical issue of what accountants should do when they come across evidence of an illegal act by somebody else, their employer or their client or fellow employees. So ethics and law interact here. There's a second bedrock principle of accounting, which is confidentiality. And it's about secret information of a client or of an employer. The traditional answer is basically, I think, to protect all secret information. There are issues about disclosure within organizations. Basically, there should be a free flow of information within organizations, but conflict of interest and so on mean there may be walls set up within organizations to keep information confidential within organizations. So, in this issue about confidentiality, what should a professional accountant do if the public interest suggests that they should act on the evidence they have of a violation of non-compliance with a law or regulation? The traditional answer, the basic, is to remain silent, no matter how important it is, and especially remain silent if there's no impact on the financial statements. There's clearly something that was kind of in the air in the debates over NOCLAR, was an emphasis on. We don't know anything about in the environment. We know about financial statements. If this is going to be a standard at all, it should be restricted to financial statements. That didn't last very long, but it was certainly in the air, and people were advocating it. There are issues about internal disclosures of information. I was just indicating that, and relating to auditing. I'm not going to talk about audit standards at all, though. That's beyond my capability here today. The other answer is if you don't like what's going on in your employer or with your client, you have the opportunity to resign. And you can talk to your lawyer, or you can talk to the priest, and that's about it. The CMA code at one time did say this exactly, is that if you don't like what's going on, resign, and you can talk to your priest if you want to. The answer of major international organizations now is that this is not the right answer. And they're just not tolerating it. There are exceptions to silence, of course, where disclosures are legally required, where there are disciplinary hearings and evidence about client or employer might be relevant, where there's privilege. If you're a professional accountant, you're a client, then there's privilege. But notice that these are ethics standards that align with legal requirements, and so they don't go beyond that. There's a whole cast of characters I won't talk about, but if you really want to understand what's going on and why this, among other standards, because this is only one, why they exist, there are all of these organizations that are putting pressure on the accounting profession internationally to change and to increase its standards, in a sense, increased expectations for accountants. The main one of these is probably the second one, the monitoring group, the one that's most powerful, and you're going to talk about that. So I don't want to talk any more about that, but this is basically the situation, and I think what this characterizes is a lack of trust on the part of regulators and others in accountants, and particularly in auditors, because they're most concerned about auditors. So some relevant dates here. There's the meltdown of the world's financial markets a few years back, and since that time, these organizations have put a lot of pressure on accountants and on the ISBA to act, to increase standards. So the new standard was adopted in 2017, and you're going to talk a bit about adoption and so on. Okay. So the monitoring group, these securities commissioners, basically what they're saying is that, and this goes back to 2008, and even longer than that, is that the work of accountants is essential, auditors particularly, is essential to the workings of the world's financial markets. And basically you're not putting up with any nonsense from accountants about this. The profession must adopt ethics standards that safeguard the securities markets. So, in particular, these groups think that in some circumstances in the public interest, the public professional accountants should act on evidence of violations of laws and regulations. The initial view was that professional accountants, and particularly auditors, should be disclosed, should be required to disclose this information in some circumstances. That's not true. I have to correct Lynn. Initially, the standard was about requiring accountants to disclose, but that was finally decided to be too strict. And so the current standard, as it's published, is that it gives professional accountants, permission, or allows them to disclose, but doesn't require a disclosure. And the basic idea here is that if you do this, the Code of Ethics used to say that you can't make these external disclosures, and now it says, well, in some cases you can. Professional roles is an important issue here because we know that accountants play different roles in organizations, and that needs to be figured out because maybe they have different responsibilities in public practice and people as employees. There are different kinds of acts. As I mentioned earlier, accountants in the debate about the standard felt more comfortable about financial information issues and not so comfortable about these other ones. But it became clear pretty quickly that accountants couldn't limit themselves to addressing financial issues. These other things are issues too. And an interesting one is about personal misconduct of senior management. And if you think of Me Too, you can see where there are issues here of the possibility accountants would have information about these acts, paying people off or whatever, and yet these could have a major impact on the organization. Is that important? The materiality of acts is important, the connection to the operation of the business, and what to do about imminent acts or anticipated acts that you expect to happen but haven't happened yet. There's an issue about senior management, which the basic responsibilities are, and this is in the standard, and it's an important feature of it, is that we have to recognize that lots of senior management are not professional accountants, and there's a code for professional accountants, and so that complicates how this might be adopted by organizations. But senior management are supposed to be the leaders of the organization. They have power to do sorts of things. The tone at the top is a critical issue, and that needs to be taken into account. That auditors and accountants are not secondary to that, but part of a bigger picture. The basic guidelines about internal disclosure are, and these are suggestions as guidance. The standard is mostly really guidance. Some of it says you shall do this and shall do that, but it's guidance about what to do if you run across this. And of course, investigate the facts, make a judgment about whether it's illegal or not. Disclose to senior management if that's possible, or those charged with governance. Okay? So there internal disclosures are required first. And senior management is expected to act on this. And the accountant is supposed to determine or consider whether management has actually acted as it ought to do. And then determine whether some action is called for, whether they have actually done anything, and then if they haven't done what they're supposed to do, senior management, then consider disclosing the evidence to an external authority. I'll skip that. So external disclosure is kind of what people focus on when they think about this standard, and it is not required. Again, it started off that way, but we went down that path for a while before we came back up and went a different direction. There are other issues about tipping. If you are going to discuss internally an issue with management, well, they might be involved, and so tipping is an issue, and imminent breaches another issue. So you just basically if you're an accountant with this evidence, you're kind of free in terms of the code of the standard to disclose externally if senior management and those charged with government do not rectify the situation, and if there's a direct effect on items of financial information, or if there's the compliance issue relates to the operations or involve substantial penalties. So it's got to be a big deal, and a big deal for the organization and its stakeholders. It's not a whistleblowing standard. External disclosures, you can't go to the newspaper. You have to go to the legal authorities. You can resign if you're an auditor, but that's not a substitute for action. So simple resignation, which used to be an answer, is not a complete answer anymore. And it's limited to violations of law and regulation, as actually whistleblower legislation is to my knowledge. So no civil matters, acts that are unethical but legal. That's me. It's telling me to stop. Can I push this button and get resume? No, okay. So I'll just take a couple of seconds. And it's not about personal behavior of management. On the other hand, if you go back to this Me Too example, Harvey Weinstein and now Les Moonves and so on, I mean, are these really personal conduct? Does that fall under this standard or not if you're an accountant? I think that's a little bit open. Now, what about NOCLAR in Canada? I'm a member of the Unified Rules Standing Committee of CPA Canada, and our job is to try to get ISPA standards into the Canadian Code of Ethics. CPA Canada has an obligation as a member of IFAC to have a code of ethics that's the same, stronger than, or equivalent to the ISPA code. So in that sense, Canada has no choice about NOCLAR. If people don't like it, it's sort of too bad. It's got to be adopted somehow, sometime. The problem is that in Canada, CPA codes of ethics are a provincial matter and not a national matter. So, and each province and territory has its own enabling legislation with different rules about how rules even get into their code. CPA Canada doesn't even actually have a public code of ethics. I didn't realize this until I got into this committee. I was quite surprised. But the reason for that is to try to forestall confusion, because codes of ethics that are binding on accountants are actually provincial. And they can't impose it across the country. So what CPA Canada can do, though, is to try to influence and support efforts to get, in this case, the NOCLAR standard adopted province by province. That's going to take a long time and be complicated. Welcome to Canada, right? So I have a few suggestions about research that relate to NOCLAR. First thing I guess I would say, of course, is that this standard is recent and it isn't going to be even kind of reassessed by ISPA until 2022. So it's kind of early days on this. But there are issues that could be done, looked at. For example, the standard setting process in Canada and relationship to regulators and interprovincial issues. Quebec is always different because it has a different legal system. Case studies could be done in experiments. In terms of case studies, there was a price fixing issue with the grocery companies. There's financial reporting issues, environmental issues, where people could do case studies and look at how might accountants have known about this, what might they have done. Corruption, SNC-Lavalin is another, again, a good example of that. Then in terms of experiments, I think one interesting opportunity would be to do some longitudinal studies, because right now, I'm sure that all accountants, not many accountants are aware of NOCLAR to begin with, and they're acting under whatever old or current norms they have for their own behavior, unaffected by this standard. So if a person could do studies now before this standard actually takes effect, and then do another study later on, ideally with the same people, but at least, same question and so on, it could be really interesting to see whether there's a change in behavior, at least experimentally, as the standards developed and implemented and actually brought into effect. And then cross-sectional studies, again, kind of now, before NOCLAR really takes effect, of how professional accountants recognize ethical issues, this one in particular. Does that change over time? What is it that people believe about NOCLAR? And they're just basic people's understandings about confidentiality and privilege. Accountants would like to have privilege, but if you stop to think about it, this standard is moving away from having privilege. So, accountants in public practice would like to have privilege, at least in their tax practice. Well, that's not going to happen, but this is actually moving in the other direction from that. So Len was exactly right. This is a fundamental change in the relationship between accountants and their employers or accountants and their clients. So that's all I have.